Waheeda and welcome back to Introduction to Accounting. Before we proceed with today's video, don't forget to give it a thumbs up and subscribe to our channel in order to get notifications for more videos. So let's get straight into it. For today's lesson, we will be discussing the elements of financial statements, the basic accounting equation, as well as the double entry principles. So when I refer to the basic elements of financial statements, what do I actually refer to? I'm referring to assets, equity, as well as liability within a company. So let's break down each element in order to get a better understanding, starting off with assets. So what exactly is an asset? An asset is a resource that is owned by a company. This resource is used in order to generate income from the daily activities of a business. Now, assets are divided into two categories. You have your non-current as well as your current assets. Let's look at each individually so we are able to understand them better. Your non-current assets. Your non-current assets, these are resources that are permanent within an entity. They are essential in the process of earning an income. The business will use these over a longer period of time in its daily operations. So what is the characteristics of non-current assets? What makes a non-current asset different from a current asset? So a non-current asset, number one, is used to generate income. Number two, it is not for resale. And number three, it has a lifespan greater than 1 year. What are some examples of a non-current asset? We refer to land and buildings, vehicles, as well as equipment. So let's move on to current assets. Current assets, these are assets which have a shorter lifespan. They're expected to be sold or consumed through the normal operations of a business. So what are the characteristics of a non-current asset? What makes us able to easily identify them? Number one, they are for trading. Number two, they are acquired for generating an income. And finally, they have a lifespan of less than 1 year. So let me give you some examples of a current asset. Current assets, we have inventory, also known as trading stock. Then we have debtors, we have our cash in the bank, we have petty cash. Guys, these are just some examples. These are not all examples. We will go through more examples as we go through more videos. So let's go on to our second element of financial statements. Our second element of financial statements being liabilities. Liabilities. So what is a liability? Liabilities are present obligations of an entity that will result in an outflow of economic resources from an entity. So in simpler terms, sorry guys, it means that it's money that we as an entity owe to another company. Just like assets, liabilities can be broken down into two categories. You have non-current as well as current. So when I refer to a non-current liability. A non-current liability is a liability that will be paid long after one operating cycle in a business. So it has a lifespan of greater than 1 year. Examples of long-term liabilities: you have long-term loans, you have mortgages, as well as debentures. Now, a current liability. A current liability is a debt that can be settled within the normal financial period, meaning one financial period. In order for a liability to be classified as a current liability, it needs to meet the following criteria. Number one, it's held for trading. Number two, it's paid within one operating year. As well as number three, we cannot defer payment. So some examples of current liabilities: we have creditors, you have bank overdraft. So moving on to our final element of financial statements. Our final element being equity.